Hey everyone, welcome back to the channel, your number one source for income-oriented investing, and I am filming this on April the 8th, so I woke up saw the markets were green across the board, but now they're starting to go all the way back down again, so I do expect a lot of volatility to be happening, guys, in the next couple of weeks or months, and as you could see, my portfolio is suffering just like everyone else's. I am filming this live. Look at the amounts here, so they're changing. They're, well, going maybe a little bit back up here. But anyway, what I wanted to do in this video, and by the way, I will be keeping you up to date as usual, even more so in the next video coming this week on my dividends coming in, how I'm redeploying my dividends. So stay tuned for that video. But in today's video, I want to, because I know many of you are trying and looking at media and trying to understand, okay, what are these tariffs? Why is Trump doing this? What is the impact? Is this going to be good? Is this going to be bad? Is this dumb, or is it the smartest thing ever, right? So I don't really watch a lot of media lately. I've been really watching it to make sure that I'm up to date so I can make videos and stuff. But two of the videos that I really recently saw that are really good, that talk about tariffs and are pretty much neutral, I only like to watch neutral stuff, is actually a video from Jikh. So Jikh, I don't usually watch his channel. I think there's a lot of like quirky things, but I have to admit that this video was really good. 4 days ago, the global reset just started, 1 million views, and let's watch it together, and I'll give you my thoughts as well on what I think of these Trump tariffs later on. But if you're trying to understand, because the market is certainly trying to understand and digest the impact, and they really don't understand where they're going or what the future impact can be, and that's why I think there's volatility. But if you're personally trying to understand these tariffs, where they come from, and a little bit of history, I love history, there's a little bit of history in these videos as well. Let's see the take here on this video. And another video I really liked was this one here from Anthony Pomp, who is a big Bitcoin bull. And I think he did a really amazing job in this video, just released 19 hours ago, on the Trump tariff. So let's take a look together, guys, and I'll give you some of my commentary, my reaction, etc. I will put the two links to these videos in the video description below. And for the record, I am speeding it up a little bit, 10% the video. So let's go.
All mean, and what's going to happen next? So most people will fall in one of two camps. The louder camp being, Trump is so dumb, he doesn't understand economics. Oh. So that's one of them. But yeah, the second camp says, maybe there's more to this than meets the eye. So let's take a look at some history and what other people have said about this concept of charging other countries more money for our products. And you might be surprised to see who the critics are.
Look, I think the president's doing the right thing. China has been taking advantage of us for two decades. They're stealing our intellectual property, which means stealing our good-paying jobs.
How far does China have to go? How much more repression? How big a trade deficit and loss of jobs for the American worker? And how much more dangerous proliferation?
Wow, Nancy Pelosi in 1996. She looks pretty good. She looks great. She's Italian, isn't she? I guess that explains it. I'm biased, of course, with that. When it comes
has to exist before members of this House of Representatives though, right? will say, I will not endorse the status quo. The lack of market access, the rip-off of our intellectual property, the transfer of technology, a country that is not willing to play by the rules in any respect in this trade relationship. You have a serious threat not only to our relationship, but to the industrialized world.
Further, what they have said is that we need to...
Bernie in 2008. Looks like this guy, does he even age? It's incredible. He always looks the same. It's amazing.
Not worry about manufacturing in America, because what we should establish is a policy of unfettered free trade. We don't need tariffs. What we need is to allow corporate America the freedom to throw American workers out on the street. People who are making 15, 20, 25 bucks an hour, healthcare, pensions, throw them out on the street, because somehow, Madam President, we are going to create wealth in America and good paying jobs in America as we shut down plants, we move to China, corporations there pay workers 20, 30 cents an hour, and we bring the product back into this country.
It's also proper for advanced economies like the United States to insist on reciprocity from nations like China that are no longer
they do all sound like Donald Trump.
To make sure that they're providing access to their markets and that they stop taking intellectual property and hacking our servers.
So imagine
that. Hypocritical, I think.
Tariffs can be beneficial as long as they are done strategically. Again, Mr. Trump has been saying this for almost 40 years.
I mean, you can respect somebody that's beating the hell out of you, but they are beating the hell out of this country. I don't know how your audience feels, but I think people are tired of seeing the United States ripped off. And I can't promise you everything, but I can tell you one thing. This country would make one hell of a lot of money from those people that for 25 years have taken advantage. It wouldn't be the way it's been, believe me.
But now here's where things get really interesting. There's another theory, which I think could be at play. Now, on the surface, tariffs are about fair trade by punishing importers, bringing back jobs, and protecting your own industries.
Right.
But this theory has less to do with all of that and more to do with the Federal Reserve, interest rates, and the U.S. national debt. Think about the timing, for example. The U.S. economy has been facing high interest rates because of the Fed's fight against the pandemic's inflation. The government debt payments went way up because interest rates are now much higher than they were a couple years ago. In fact, U.S. interest payments on debt are approaching $1 trillion a year.
Ugh.
Money that just goes out the door to bondholders. Now, if you're a president who campaigned on debt reduction and economic growth, high interest rates stand in your way.
Not good.
Just think about how Donald Trump has built his wealth.
Real
his
estate.
Entire life, he invested into real estate, then borrowed against his real estate to buy more real estate. Some people call it the BRRRR strategy. Buy, remodel, rent, refinance, repeat. Buy, remodel, rent, refinance, repeat. And that can only be possible in a time when interest rates are low. He even said no one gets rich while interest rates are high. So enter tariffs. Tariffs hurt everybody. They
hurt the market, and when the market gets hurt and when things start going bad, guess what the Fed does? They cut interest rates.
Costs, they scare markets, and they can stop spending and investment. That's a bad thing. Even Howard Lutnick said, the world putting tariffs against itself, of course it's bad.
When we're all equal and everything is free and fair, if you raise tariffs and they raise tariffs, isn't it bad for society? The answer is, of course it is.
But a slower economy can accomplish something. It might send the U.S. into a temporary short recession so that it forces the Federal Reserve to cut interest rates.
I think we're kind of already are. Remember, guys, correction, recession, all these dire terms, it just means a certain percentage pullback in the stock market, right? I think 10% pullback is correction. Recession, I don't know what it is, but even in 2022, we kind of had a recession. They didn't even want to admit it, so.
To stimulate that growth, to revive the economy, and to allow people to get rich again. And what else do lower interest rates do? They make it cheaper for the government to borrow and refinance its debt, of which this year there will be about $9 trillion.
That's a lot.
Now, all of this sounds almost Machiavellian, right? But it's a theory with a lot of data points suggesting that at least...
I don't know why he said Machiavellian, but...
It could be possibly intentional. It's supported at least in part by one of the most legendary macro investors and economic historians of all time, Ray Dalio. You might know him as the founder of Bridgewater, which is one of the biggest hedge funds in the world, and the guy who literally wrote the book on global economic cycles, principles for dealing with the changing world order. And recently, he tweeted something that might help decode exactly what's going on. So Ray Dalio broke down tariffs like this. They're a special kind of tax, and when you understand their first and second order effects, it starts to make sense why all of this might be happening right now. And here's a really simple version of what he said. Tariffs raise revenue for the government and protect domestic industries. They're actually deflationary for the countries being tariffed and inflationary for the country that's imposing them. But if the
prices could go up, right, on those goods and services, I believe.
Economy slows down enough,
Yeah.
the central bank, like the Fed, steps in with rate cuts. And that changes everything. In other words, tariffs can force the Fed's hand. Ray Dalio points out that these policies can actually reduce global economic efficiency, lower capital flows, and eventually lead to something called stagflation, which is bad for most of the world, but useful for the US if the Fed responds with easier monetary policy. He also said that tariffs can decrease our reliance on foreign production, boost domestic resilience, and help fix unsustainable trade and debt imbalances. So You take that idea and you combine it with $1 trillion in yearly US interest payments, and the fact that Mr. Trump's real estate background taught him the importance of refinancing during low interest rate environments, and suddenly all this starts to make a lot more sense. Slow the economy down, trigger a recession scare, force the Fed to cut, refinance the US debt, potentially reindustrialize the US, fix the trade imbalance, and make the trade more fair. Mr. Dalio even ended his post saying that the world's monetary and geopolitical systems are overdue for a reset, and that these kinds of abrupt, unconventional moves are exactly how it happens. He literally titled his new book, How Countries Go Broke. And while that might sound scary, it means that these kind of resets might actually be a survival tactic to reduce foreign dependency, rebuild domestic production, and make sure that the dollar stays strong as the world's reserve currency. But the real point I want to leave you with is that we might disagree on how to fix something. But as long as our goal is mutual, which is to fix something, then we should give each other the benefit of the doubt. And it's okay to be critical, which is why I explained that the tariff numbers made very little sense. It seems like...
Yeah, so by the way, in the beginning of the video, he talks about the tariff numbers and how they're inaccurate, or they calculated it wrong, but that someone figured out how they came to those numbers. I suggest you watch the video at the beginning. But I love how he's just trying to say as neutral as possible here. And it's the same thing with me. You know, I'm neutral, guys. I'm not Republican. I'm not liberal. I'm not conservative. I'm not liberal, I guess, or Republican, Democrat, whatever it is. I'm in Panama, so I'm considering myself a neutral, independent, international investor. But yeah, I thought this video was really good. Let's see what he ends on here.
They're confusing trade deficits with tariffs, but I also explain how this might also be part of a bigger strategy, maybe one that's more long-term. And maybe that's why Mr. Trump calls this Liberation Day, not just because it punishes other countries, but because it resets the system. It's like medicine or surgery, painful in the short term, but potentially healing in the long term. Ultimately, though, no one knows, besides Mr. Trump, how long this pain might last. But if you want to go deeper with how these tariffs might affect your stock portfolios or crypto and...
Yeah, so I think this is a pretty good take that there might be, you know, a long-term plan for this. Trump has been talking about this for a really, really long time, about getting ripped off, etc. He also has been talking a lot about, or trying to pressure the Fed to lower interest rates, right? I'm sure now Jerome, whatever his name is, Powell, which I believe he's been, you know, I've always said he's been doing a good job with the interest rates, not cutting them too harshly. Now he's probably needs to cut them, which always stimulates and is always a good thing, especially for the U.S. government right now. That's, you know, as we all know, is in big trouble with that big debt. So I think it's a pretty good take on it. I think, you know, that there really is two camps, one that just are ranting and raving and screaming and calling Trump an idiot and his team an idiot. And I know for sure he's not an idiot and his team is not an idiot. I mean, those guys are smart guys. They know what they're doing. Will it work? I don't know. That's the thing that we need to see. But I certainly see the intention on it. And like he's been saying, it's really to reduce that deficit and get rid of those trade deficits. Will it work? Will it not work? I don't know, guys. But, you know, as someone who's into bodybuilding, I know short-term pain for long-term gain makes sense. Will it work? I'm not sure. So pretty cool video. You can watch the whole thing if you want. Let's move on to the next one, which I feel was a really, really good summary from someone who's typically, I think, politically neutral. He's big on Bitcoin. So I'm assuming he voted for Trump because Trump was all for that Bitcoin regulation. He was pro Bitcoin. But I think this is another also very interesting take. And he talks a little bit fast. I sped it up a little bit, but let me speed it up a little bit at 10% and let's go.
I've got a lot of friends that have been reaching out to me asking about tariffs. What are they? Why are they being implemented? How do they work? And what do I think is going to happen in the future? And so rather than answer all those text messages, phone calls, emails, and conversations, I thought I would just sit down and talk to you and explain exactly what I'm thinking.
That's kind of like why I started my channel, by the way. Everyone just kept asking me, what are you doing? How are you not working? How are you, retired? We said, let's just do a channel. Just funny.
First, when you think of tariffs, we have to go way back in history. We have to understand for the last 50 years, there's been a divergence of experience for people in the United States. On one hand, the United States is rocking. Our economy is strong. People have gotten wealthy. There's incredible social and economic mobility for a certain portion of the population. Those people they own investment assets. And as we've increased our national debt, we've devalued our dollar, and we continue to push those asset prices higher, the people holding the investment assets, they get wealthier. But the people who are the investment asset holders, they are completely oblivious. And frankly, they don't even know that there's another portion of the population. Let's call them the working class. That working class used to be a very small portion of the population, but it has grown over time. This group, approximately 50% of Americans, they have no investable assets whatsoever. They hold 100% of their wealth in dollars. And so as we have increased the national debt and devalued the dollar, these people have actually been hurt. I heard a great quote from Scott Bessent, the Treasury Secretary, recently. He said that in the summer of 2024, there was a record amount of Americans that took vacations in Europe. At the same time, there's a record number of Americans who are using the food bank during the summer of 2024. That's a perfect illustration of the difference in experience between the wealthy and those who don't have investments. Now, of course, there's some people in the middle, but those two stories are really the story of America right now. And so we have a candidate in President Trump who got elected to the White House on a very populist movement. A big part of what he said he was going to do was that he was going to slash spending, he was going to levy tariffs and level the playing field, and that he was going to try to put working class economic policies into place. Now, of course, those things all sound great, but they're really, really, really high change when you go and you actually implement them. And so that's what we're watching right now. Now, let's talk about exactly what the working class is ultimately upset about. The first thing is that that dollar's been devalued, and you don't have to go back over 50 years. In the last 5 years, the US dollar has lost 26% of its purchasing power. It's really hard to live your life if 100% of your net worth is sitting in cash, and then it's losing 26% every
inflation, basically,
half decade. On top of that, we have seen manufacturing, industrial jobs completely shipped overseas. We've seen a hollowing out of that middle class. Right now, 2 out of every 3 children in the United States, they think that their financial future is bleaker than their parents. It's the first time in history that more people think their future is bleaker than their parents. And so naturally, these people, they've lost hope. They don't have access to jobs. They don't make enough money. They're watching the expenses around them explode. Housing is unaffordable. Food is going up. Gas prices were skyrocketing. Everything in their life was getting harder, and they felt like they were falling further and further and further behind. And so naturally, they used to sit there and say, we have no hope. But then a candidate showed up, as has happened in countries around the world throughout history. When the working class is upset, eventually somebody leans into the populism and they say, I will listen to you. I will put policies in place to help you. And so naturally, Donald Trump, what he's doing, whether you agree with him or not, whether you think he's smart or you think he's an idiot, this is objectively what he's doing. He is sitting there and he's saying, we have trade deficits with other countries. They are getting a better deal from us than we are getting from them. And so he is attacking that and trying to reset global trade. The way that he's doing it, again, whether you agree with it or you don't, the way he's doing it, though, is he is levying tariffs. Those tariffs essentially say, if you want to bring goods into the United States, then you have to pay a certain amount of money. Now, usually it is levied as a percentage. And so what they have done is they've said blanket on all imports in the United States, 10%. If you make something outside the US and you want to bring it to the US, you pay 10%. Some countries, they've gone even further. There's rates as high as 34% for countries like China. And so the reason why this is important is by setting that up, what you essentially are doing is you are adding a protection for the American economy. Now, this isn't a new idea. America was literally founded on this idea. If you go back to when we set ourselves up as a country, the founding fathers put in place a 5% blanket tariff on all imports into the United States. Now, the reason they needed to do that was twofold. One, they needed to actually generate revenue for the US government so that they could fund all of their different activities and provide services. We were a new country. We didn't have taxes. There was no such thing as federal income tax back then. And so tariffs were the way that we funded the US government. On top,
imagine that, guys, no income taxes back then.
Of that, though, the other thing was that the European countries, they had really high industrial capabilities. The US, we were in our infancy. And so by putting these tariffs in place, the idea was that you could create protection for those infant industries. Those infant industries could then have time and space to go build themselves out. Those tariffs ended up laying the foundation for what eventually became the Industrial Revolution. The United States went through a massive boom. We were able to mature. We were able to build out so much of what made this country what it has become. Now, of course, over time, the tariffs started to get reduced and we added in the income tax. And so if you look at the chart, what you can literally see is tariffs come down and income taxes go up. Income taxes started with like 1%, and eventually now we have people in this country who pay more than 50% total tax rates. And so what we did is we swapped from taxing foreign countries and foreign companies and using that money to benefit Americans to today we actually tax Americans, both companies and citizens. And then frankly, a lot of that money gets shipped overseas to help other people. And so that swap is a huge component of what we're watching play out here. Now, again, we go back to the working class. They feel like they're left behind. They feel like they have no hope. They feel like they have the deck stacked against them. And so you have Trump who shows up, and what he says is, I'm going to put these tariffs in place. And I'm really going to do it for 3 different reasons. The first is he wants to generate revenue for the U.S. government. A huge part of what Trump wants to do is he wants to be able to cut government spending. He needs to replace that spending or that capital with revenue coming from somewhere else, so through the tariffs. And then he ultimately promises, we'll see if he does it, he promises that he's going to give a massive tax cut to people who earn $150,000 or less per year. And so the whole idea here is, can you shift our economy from spending tons of money in the public sector and move that activity to the private sector? If you look at job growth in the country over the last couple of years, a very large portion of all jobs that were created were actually hiring of government employees. It wasn't private sector growth, it was...
That's always, to me, it's always a bad sign when the job growth is in the government, because, you know, the government doesn't produce anything besides red tape. And that's kind of what happened to Argentina, right?
Public sector employees. And so what this administration wants to do, again, they're aspiring to do it, is they want to shift from public markets all the way to the private sector. Now, those tariffs will generate revenue. And so the idea here is, if you generate revenue, then you can start to lower the tax rate of certain people. Sounds like a good idea. Let's see if they can do it. The second thing that they want to do is that they actually want to gain negotiating leverage over foreign countries so that we can get foreign countries to lower the tariff rates that they place against the United States. Now, a lot of people don't know this, but foreign countries actually tariff us at very high rates compared to what we tariff them. In almost every case, foreign countries have higher tariffs on us than we have on them. Now, a huge argument against tariffs is that we should have free trade. Free trade is the idea that these foreign countries should be able to trade with us without any friction, and we should be able to trade with them. It's a cute idea. I like the idea of free trade. I wish that we had it. But America now faces a situation where we are realizing free trade does not exist. Even if we have no tariffs or no trade barriers against other countries, if they have those trade barriers against us, then that means that we don't have free trade. They quite literally are creating friction for our producers to send our goods and services to them, where we are letting them have unfettered access to our country. And so naturally, what Trump is trying to do is gain some sort of leverage so that he can go to these countries and say, you must change. You must take down your tariffs. You must take down your trade barriers. We've seen Trump. He said things like, if they do it to us, we're going to do it to them. And we've even seen him say things like, hey, why is it that they're all doing it if these are so bad? Now, again, whether you agree with them or you don't, objectively, this is his thought process. This is what he's trying to accomplish. And then again, the third thing that Trump is trying to accomplish with these tariffs is that he wants to reshore manufacturing and create American jobs. Now, the reshoring of manufacturing really became a big talking point for both Democrats and Republicans during 2020, because during...
And before that, like we saw those clips, right? This has been a thing for a while. We heard of, you know, you hear of that term, the Rust Belt. That's where all the manufacturing was, and it got completely destroyed, I guess. That's what, you know, trying to get that manufacturing back, right, to the U.S.
The pandemic, what we realized is we chased efficiency and low-cost labor all around the world for the last couple of decades. Sounded great. We get cheap products coming into our country. But the problem is that we gave up resilience. All of a sudden, we needed PPE, we needed medicine, we needed all sorts of different goods and services, but we couldn't actually do that here in the United States. We were relying on foreign nations. And so when the world shut down, that became a problem. Now, I don't expect another pandemic to occur.
Right. And I think that's what, you know, when you say it's a matter of national security, I'm assuming that's what they're talking about, right? If the U.S. enters a war or something and they don't have steel production, they don't have this and that, it could be a problem, right? So that's why I guess that's the angle for the national security element to all this as well.
At size and scope, but there are many other reasons why this becomes a really big national security issue. Imagine if we get locked into some sort of war. Imagine if there are natural disasters. Imagine if there are other economic issues that come up that prevent us from actually being able to get those goods from foreign countries into the United States. That's a big problem. And so this idea of reshoring manufacturing is a national security issue, but also we want to create American jobs. And so any country that doesn't make goods, it's a big problem. I recently saw my friend Naval Ravikant. He had this great tweet where he said, the countries that do not make drones are going to have a big problem moving forward. Now, why is that important? If all of a sudden warfare is going to go from soldiers with guns going out onto the battlefield and shooting at each other into a drone-based warfare system, which looks like where we're headed, we can't rely on Chinese drones or other foreign adversaries to provide us with the different technology that we're going to use on the battlefield. That doesn't make any sense. And so there's example after example after example of this. And so this is not unique to the United States. There are books written about various countries all over the world. One book that I would suggest you read is a book called Twilight of the Elites, and it's written actually about France and how France has a very similar problem to the United States. They shipped out manufacturing. They created this kind of two-caste system. They really hurt the working class. The wealthy got wealthier, and it has led to a rise in populism. And so this is something that really comes from globalization more so than the United States or any one country. Now, let's go back to the tariffs for a second. As we went and we actually placed these tariffs on these countries, one of the things that we've seen is that there was an experiment run in 2018. And I think that experiment's really, really important. We had two things happen in 2018.
This is when Trump was in power, I believe, and they were doing that China trade war, right? So we kind of have a taste of how it went, I believe is what he's saying here.
That I think are worth mentioning.
Are you looking for a simple way to earn Bitcoin rewards every single day?
The ad.
Simple mining, we help people mine.
Washing machines, solar panels, and steel. Things happen in 2018 that I think are worth mentioning. The first is that Trump's administration 1.0, they put tariffs on washing machines, solar panels, and steel. When they did that, we saw in the first couple of months the prices of those goods rise for about 3 to 5 months. But then after we peaked 3 to 5 months later, those prices fell very aggressively for the next, call it 12 months or so. And so every single product that we put a tariff on, within 18 months, that product was cheaper than the pre-tariff level. That goes against the idea that tariffs are inflationary. Now, on top of being able to...
I guess they're temporarily inflationary is what he's trying to say. But then when you bring it back or when you do it in another country, not only that, but maybe the quality increases as well, right?
Raise revenue through those tariffs and also incentivize American manufacturing. What we were able to do is that Trump was able to drop the federal tax rate from 39.6% down to 37%. And so that's the idea here is, can you raise revenue with tariffs and can you also drop the taxes? That shifts us from an income tax-based system to a consumption tax-based system. There's a loophole in tariffs. If you don't want to pay higher prices for certain foreign goods, then buy American-made products. There's a financial incentive now to buy the American products. Now, of course, I think that what's happening in the current iteration of tariffs is that Trump came out, he was in the Rose Garden recently, and when he announced the tariffs, he came out with monster numbers. Frankly, every friend I have on Wall Street was shocked at how big the tariff numbers were against some of these countries. But I actually don't think that's where we're going to end up. Instead, what I think is happening is that there's an anchoring, and you can go and you can read. I recently reread the book, The Art of the Deal, not because necessarily I think that Trump's some massive genius, but I want to understand the person who's leading our country. How do they think? How do they act? What is their mindset? What is their mental frameworks? And one of the things that's talked about in that book is anchoring in a negotiation. You got to come out with a big number, kind of shock and awe them, and then you negotiate down from there. But at least the starting place is in your favor.
Yeah, so I've same thing, right? I've read The Art of the Deal because it keeps getting mentioned on the TV and stuff. Is this The Art of the Deal? So you know what? I highly recommend you guys read it if you haven't read it. It's actually pretty entertaining. You know, the first part of the book is literally just a day in the life of Trump, but then the important part is really and then there's a bunch of stories about all, you know, this building and the skating ring and all this, you know, these funny stories of his biggest and best deals. But right in the middle is his art of the deal negotiating style, and right there in chapter 2, I think it is, he literally says at the beginning of that chapter is, my negotiating style is pretty simple. I come in absolutely guns blazing, all crazy. You know, it literally says I come in all crazy, basically aims really, really, really high, and then he picks up the pieces to, you know, he gains that leverage, and then he picks up the pieces to get better deal. And I think that this is exactly what he's trying to do. Will it work? I don't know, guys, but it's how he's, you know, what he's been doing his whole life. So I don't see it as any different as president. It seems you got to give it to him. At least he's consistent, right, in what he says and his style. So
what I think's happening here. I do not expect us to end up in the steady state with very high tariffs of 25, 30, 35% against most of these foreign nations. Instead, I've been very consistent over the last couple of months, and what I think we should end up with is somewhere between 5 to 10% tariffs on all imports into the United States. And rather than levy that as a punitive system where we're punishing people for their actions, instead we should just have a blanket 5 or 10% tariff, and then we remove the tariffs one by one for certain products that we want to incentivize to come into our country. As many of you have probably heard me say, avocados and bananas, we're not that great at producing those. And so we need other countries to do trade with us. We should remove tariffs or significantly drop them on those products to incentivize them to bring those products to us. And so ultimately, this is where I think that we're headed.
Yeah, we're probably headed, I think so too, I agree with this, into just a big negotiation with the different countries, right? I think that's what Trump wants to do. You already started hearing countries already to back down and to offer things, and everyone, obviously he's a big exaggerator, guys. When he says 100 countries have already called me begging to do a deal, I'm sure that's exaggerated, but there's probably some truth to it. So we'll see what happens. And I think this is why the markets, there's so much volatility. It's because there's a lot of uncertainty. It's not necessarily gonna be the end of the world, but markets don't like uncertainty, and that's what makes things volatile. Look at today, the market started really high. Why? And then now they're going back down. How could companies be worth 2, 3, 4, 5% more or less in a matter of a few hours? It makes no sense. So this is what's happening to the markets, but as a passive income investor, it doesn't really bother me. But anyway, that's for the next video.
That I think that these tariffs, we have a big shock and awe. Investors are very scared. Right. There's immense pressure on these foreign leaders. They're going to come to the table. Now, what are they going to say when they come to the table? Well, we're starting to get some of those kind of examples. First, let's look at Taiwan. Taiwan has come forward and they've said, listen, we really need the United States to be on our side. We want to do business with the United States.
This is where another thing people need to realize. United States of America is literally the biggest consumer of the world. That's the leverage. That's the leverage that the U.S. has. That's why putting tariffs on other countries is very powerful, because it's U.S. buying most of the stuff that the world produces, right? We got to remember that.
We know that right now we have a very high tariff rate on the United States in a way that maybe other countries don't. And so what we're willing to do is we're going to drop all of our tariffs, 100% of our tariffs. We're going to drop them down. On top of that, we're going to remove all trade barriers, not just looking at tariffs, but things like currency manipulation, subsidizing our producers, all these things that give us an advantage in bilateral trade. We're going to drop that as well. And then on top of that, Taiwan says that they are going to increase their investments in the United States. They already have TSMC who's going and building factories here, but they want to increase the amount of money that's being invested. And they are also committing to buying our industrial products, our agricultural products, our energy, and our weaponry. And so what you get is you basically, very quickly after the announcement of these tariffs from the Trump administration against Taiwan, they come to the table and say, hey, no mas. We don't want to get into a trade war with you. Instead, we hear what you're saying. We agree with you. Here's what we're willing to do. We're going to drop tariffs. We're going to drop trade barriers. We're going to make bigger investments in the United States, and we're going to buy goods from you that come into our country. And so if that agreement actually gets signed, that'd be a pretty good deal for America. And guess what the U.S. is likely to do? We're likely to take the tariff that we originally said we were going to put on them and drop it. Maybe we'll go to 0, or maybe we'll go to 5 to 10%, but it will be a much lower rate than what we currently have announced for Taiwan. Now, on top of that, Cambodia, Vietnam, India, many other countries are coming to the table and they're saying, we hear you. We are willing to drop the tariffs that we have against your country. Now, what's interesting is the administration is saying to themselves, you know what? 0 tariffs against us, that's a good start. But we actually want to make sure that you're not manipulating your currency, that you're not actually subsidizing your producers, that you're not trying to hurt American workers, that you're not trying to hurt American manufacturing. And so we're going to see where all these negotiations go. But on the other trade barriers that are in place, I think a great way to understand that is think about Canadian lumber as an example. America, we've got plenty of lumber. We actually can be very large producers, but there are plenty of people. Go talk to contractors or go talk to people who buy lumber. Many of them are buying Canadian lumber, and they'll tell you Canadian lumber is cheaper. Now, how is it that somebody could go and actually get lumber from Canada and then move it all the way to the United States, and they could somehow do that cheaper than people here in the US? Now, some people will say that there's labor, but it's North America. Labor rates are actually pretty comparable than if you were comparing, let's say, America and China or some Southeast Asian country. But actually, one of the big things that's happening is that the Canadian government is subsidizing the production of lumber in Canada. And so they're able to flood the US with cheaper lumber than what American producers can actually.
That's interesting. Not sure if it's true or not, but I know I've heard Trump talk about lumber, right?
Produce lumber at. So naturally, the US government has a choice. We can either let that continue to happen, which hurts the American producer, or by levying tariffs, we can say, no matter how much you subsidize those producers, we are going to make sure that you're selling your products on an level playing field than the American producer. And that's how you ultimately use the tariffs. Now, again, free trade would be amazing, but we don't actually have free trade. And so the US has to step in. We have to play this game. We have to take a strong stand in order to get these people to the table. Now, of course, moving forward, one of the things that I think a lot of people are going to be worried about is, are the prices of certain goods going to go up? In some cases, yes, of course. But what we do see is, let's say, for example, back in 2018, when we put very high tariffs on China, 20% or so, we actually only saw the price of the goods go up about 4%. Now, how could that happen? What occurs is that there was actually manipulation of the currencies in order to go and say, we don't want a 20% increase in prices. And so you have to remember, these tariffs happen in a very large, complex, global economic system. Now, part of that global economic system that I think is worth paying attention to right now is, although the tariffs are getting put in place, we're seeing a number of positive developments in other areas. For example, oil prices have been coming down substantially. They're down about 25% or so. We currently have gas prices that are at a 4-year low. There's a lot of Americans, that's a very big portion of what they spend money on. And so getting that down 25% quickly is obviously helping them. On top of that, inflation has been crashing about the last 3 months or so. Trueflation, the real-time alternative inflation metric, they had inflation at 3%, which was higher than the government numbers in December. Today, they have it at about 1.4%, which is lower than the government numbers. And so as inflation...
That's good. As inflation goes down, that, like I said before, I mean, that's going to motivate the Fed to start cutting rates, right? So
has been crashing by about 50% in the last 3 months or so. A lot of that is because these deflationary forces at play in the economy. And then lastly, we also see something called the 10-year yield going down. Now, why is that important? A lot of things when you're borrowing money are based on the yield rates or these 10-year yields. And so when you see there is, as that comes down, mortgages get cheaper. Companies can borrow money at cheaper rates, etc. And so naturally, if you think about this, yes, the stock market is going down because investors are fearful. They're nervous. They feel like there's uncertainty and chaos. They're super concerned about what's happening out in the financial markets. But at the same time, gas prices are going down. Food prices are not exploding higher. Mortgage rates are going down so homes can become more affordable. And naturally, what you're seeing is inflation stay suppressed. Those things help the working class in a way that maybe the wealthy, the asset owners, don't quite appreciate. And so naturally, these tariffs, one of the things that you've got to pay attention to is they're not designed to actually pay attention to the stock price. Instead, what you see is the administration saying something very clear. We don't worry about the stock market right now. We're very worried about oil and the 10-year yield. They feel like those things going down not only help the working class, but they lay a foundation for a massive economic boom moving forward. Now, my word of caution to everyone who's watching this is the following. If you look at the stock market, if you turn on financial media, there is fear porn everywhere. Doomsdayer, fear mongers, they're telling you the world is ending. Calm down. Take a deep breath. The world is not ending. Could it be bumpy? Of course. But the world's not ending. Instead, what you need to really pay attention to is the fact that during COVID, we saw markets crash and then there was a quick recovery. The same thing is likely to happen here. And so reflexivity at play is an important part of this. I think that everyone who is fearful, everyone who is freaking out, who's selling their stocks, in a couple of months, we're likely to look back and say that was a complete overreaction. And so there's uncertainty in the market. What I know is that the people who are patient, the people who don't have leverage, the people who can think long term, they're likely to not feel a lot of pain right now. They're likely to look at the prices going down of their favorite assets as buying opportunities rather than paying for them to actually have to go and sell those assets. So keep your head on straight. Tariffs, they're a big deal right now. Pay attention to what's happening, but understand that the current situation is probably not where we end up. I think that the tariffs are a good policy, especially if we get good trade deals and then we get those tariffs rate down and lead to an economic boom. Let's see what happens.
Yeah, that was a great way to end the video, guys. I mean, I have to agree with him at the end there.
I've got a lot of...
especially about keeping a cool head. Remember COVID, I know a lot of people are comparing this to the COVID crash. To me, it's completely different because COVID was a real black swan event. This is something that's being triggered intentionally. And like he says, guys, If it's gonna work or not sure, but the general idea behind it, I think also it's a good policy. I think there's going to be a lot of short-term pain in the stock market because of a lot of the fear and uncertainty, but as usual, I think that always calms down. Remember, it's all based on emotion and everyone calms down after a while. Hopefully we'll start seeing these little deals, these countries that make deals, and hopefully the Fed cuts the rates, and that's going to help the stock market. So I just look at this as another buying opportunity, guys. I'm a long-term investor. We should all be long-term investors. I'm definitely not freaking out. So I just thought I'd share with you these two videos that seem, that it's not Fox, it's not MSNBC, it's not CBC. This is why I like watching more of these independent guys. Maybe they lean more towards Trump or not, but I think the policy is okay. But his message at the end was really, really important. Calm down, relax. If we think about the markets, they can't just go up forever. The market was due for a correction. Anyway, I think the average correction is done in 170 days, and it's been over 300 days without a correction. If you look like after 2022, the S&P is up. Guys, that's even more scarier, because the more high it goes without any sort of correction, the more drastic the correction could be. So hopefully this has been informative for you. I'll put the two links in the video description below. Let me know what you think about these tariffs. You think they're going to work? You think they're stupid? They're not going to work? And if you do think they're stupid, I would love to know an opinion, because I have not seen an alternative plan to try to tackle this crazy debt that the US government has. Do you have any other plan or suggestions or idea? I don't think anyone besides Trump has an actual plan as far as I know, but I'm always open and willing to learn alternative solutions, right? Ranting and yelling and raving doesn't solve anything. It's putting a plan in place and solution. So we'll see what happens. And I also recommend you guys to read The Art of the Deal if you want to know a little bit Trump's negotiating style. I definitely am seeing it at what he's doing now. I thought it was very interesting, and the book's pretty entertaining as well. Obviously, it's very exaggerated. Trump is he exaggerates a lot, guys. But hey, let's give him a chance. I say let's at least give him a chance to see if this plan works. Can we at least give him a chance? Maybe it'll work, maybe it'll backfire. I don't know. But the important thing for us investors, I think the most important thing is not to panic. Keep cool, keep calm, keep buying these cheap shares. I certainly am. Stay tuned for a video in the next couple of days. I'm going to show you how my portfolio is doing. So make sure you subscribe to the channel if you want to see my journey. I will always be open and transparent to you guys. I'll show you my portfolio value. I'll show you what I'm buying, what I'm averaging down, because basically averaging down now, it's a great opportunity. And thanks for watching, guys. See you next time.